Consider Alphabet stock a buy under all circumstances. Alphabet's flagship Google search engine just turned 25, but instead of celebrating, investors are concerned about several issues at hand with the tech giant's shares. These include risks associated with antitrust scrutiny, as well as risks related to the impact of interest rates staying higher for longer. Yet despite these challenges, Alphabet stock remains a top buy among the Magnificent Seven. Let's dive in. Alphabet stock outlook. Here's why Alphabet is still a magnificent buy. Welcome to Timely Investment Research. Alphabet's flagship Google search engine just turned 25 this week. However, among Alphabet stock investors, there isn't much celebration going on about reaching this milestone. Rather, worries about issues more pertinent to the future performance of this tech giant's shares are top of mind right now, and for good reason. The company's antitrust trial kicked off earlier this month. The filing of an antitrust suit against another top big tech name, Amazon, has also heightened concerns about antitrust scrutiny of Alphabet. Also, investors are digesting the prospect of interest rates staying higher for longer and what that means for tech stock valuations. Yet, even as all of this plays out, is it time to avoid Alphabet? Not so fast. Instead, as these issues affect the stock's performance in the short term, there may be the opportunity to scoop up a long-term position. Alphabet stock and its stalled comeback. Until a few weeks ago, Alphabet was amid a stock price comeback. Throughout the summer, strong quarterly results and AI tailwinds sent shares back into rally mode and kept them there. During this time frame, Alphabet stock perked up from around $125 per share back up to near $140 per share. As we pointed out earlier this month, Alphabet's rally carried on, even as AI mania waned for other tech stocks. However, in recent trading days, investors have pivoted back to a more cautious view about Alphabet stock for the reasons mentioned earlier. Shares were first knocked lower, in tandem with other tech stocks and the broad market, by the higher for longer interest rate news. Confidence in a swift Fed pivot has cratered, with this putting investors in a more bearish mood. Considering the Amazon antitrust case, Alphabet's own antitrust headwinds are starting to weigh on shares. Still, these new challenges notwithstanding, you do not necessarily need to stay away. It's very possible that this company and the stock can overcome them, assuaging antitrust and interest rate worries. It's not set in stone that high interest rates will keep Alphabet stock stuck at current levels, or worse, knock shares back down to lower prices. For one, as Wedbush's Dan Ives recently argued, tech stocks can still power ahead despite high rates. To back up his case, the analyst cited AI growth as well as the rebound in enterprise IT spending. Such a scenario could play out for Alphabet, especially since, in addition to these favorable factors, the company also has the digital ad rebound, plus the positive impact of cost reduction efforts on its side. All of this could enable the company to produce the type of double-digit earnings growth to not only sustain Alphabet's current valuation, but justify an additional move higher as well. The antitrust scrutiny may not be reason for concern either. At least, that's the view of JPMorgan Doug Anmuth. On September 8th, around the time the antitrust trial began, the analyst argued this courtroom battle is a win-win for Alphabet. Per Anmuth, even if Alphabet loses the case, it can still gain. Why? Losing the case would mark the end of the company's current search distribution practices, resulting in significant cost savings. Alphabet is a buy. Turbulence with Alphabet stock could continue in the near term. Antitrust and interest rate anxiety may carry on from now until year's end or well into 2024. However, no matter if the stock experiences major or minor weakness, if you are a long-term investor, consider it an opportunity to buy. Even if shares experience little turbulence from here or resume climbing sooner than expected, you may still want to buy. Alphabet sports a strong combination of a reasonable valuation, 23.3 times forward earnings, coupled with the prospect of healthy earnings growth. Compare that to other Magnificent Seven components, which may be pricey relative to growth projections, such as with Microsoft, or richly priced and possibly at risk of being priced for perfection, like NVIDIA. Hitting the sweet spot as a reasonably priced name with solid growth potential, Alphabet stock is a top buy among the Magnificent Seven. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.